Good afternoon. Thank you. Appreciate that. It feels a little like church with all those people in the back of the room. If you'd like to come down and join us, it might be easier to be a part of the conversation and certainly the dialogue at the end of it. We'll be taking questions from the audience for our speakers, so there are cards available to write them on, and they'll send them up to us, and we'll sort through them, make sure we group the similar questions and get as many of them in as possible in the latter half of our session this afternoon. I'm Mary Stagaman, the Executive Director of Agenda 360, the Regional Action Plan to grow talent, jobs, and economic opportunity for all who call our region home. We're part of the Cincinnati, USA Regional Chamber, and it's my pleasure to be here this afternoon to lead this panel who are going to tell us, after you've heard this morning all about transportation and transportation needs in our community, they're going to help us figure out how do we get it done, and in particular, how do we pay for it. When we were building the Agenda 360 plan and releasing it in 2009, we talked to thousands, literally thousands of Greater Cincinnatians and leadership throughout the region about what their priorities were for creating a strong economy and a vibrant region. You probably won't be surprised to hear that at the top of their list, number one, was education. And education is always in our sights. We know we've got room to grow in that regard, both in getting more kids prepared for kindergarten and more of them out of high school and into college, but more college graduates in our region, because that's a leading sign of economic prosperity. But right behind education, and really with very little difference in terms of the degree of priority, was transportation. And in particular, they asked us to do three things: preserve our existing infrastructure and strengthen and build it out as we need it to continue to grow as a region and as a community; to expand our multimodal freight capacity. We have great capacity already. We actually have all the modes we need, but we need stronger and better in that area. And then finally, to expand our regional transit assets to build a truly regional transit system that will serve the needs of the entire community. So I think it's appropriate that this conversation today about integrating all the different modes and better leveraging our transportation assets in this region is coming at just the right time. As the funding landscape has been transformed at the local, state, and federal level, regions like ours are competing even more for more limited dollars. So we frankly just have to get a lot more creative about how we approach these challenges of infrastructure, increasing the multimodal capacity, and building out better transit for our region. It's all about preserving the assets that we already have and building upon them for the future so that the next generation has an even better and more vibrant community in which to live and work and play and stay. So we have a very distinguished panel here today. I'm just going to introduce them very briefly as we get started, and then we'll go through, and don't forget we'll have questions at the end. And we've had a few last-minute changes, so bear with me as I kind of work my way through the list. But we're very fortunate to have with us today Mark Polston, who is the Deputy Director of the TIFIA Credit Office at the U.S. Department of Transportation. And Mark is going to do double duty. Deputy Administrator Karen Hedlund from the Federal Rail Administration was to be with us, and unfortunately she was taken ill last evening, and Mark has graciously stepped up and offered to cover what she was going to talk about as well. So you're going to be hearing from him first, and he will be followed by my friend and colleague Bob Koehler, who's the Deputy Executive Director of the OKI Regional Council of Governments. Many of you in the room already know Bob and the great work that he's doing at OKI and throughout the region. And then Rusty Schuermann, who is General Counsel for the Hamilton County Transportation Improvement District with the firm of Kegler Brown, is going to be joined, I suppose, that is Mr. Hubbard right there, Ted Hubbard, Hubbard, who made it back. Gosh, you were quick. Thank you for joining us. Our county engineer, many of you may have voted for him, so you know Ted's name, and he and Rusty are going to tag team about the role of the TIF in helping to build out all these assets that we're talking about today. And then finally, we'll hear from my colleague Terry Garcia Cruz, who is the Chief Executive Officer of SORTA and runs our Metro transit operation, and has a really broad view of the role of transit in a community. And she's going to be talking in particular about how we work with federal dollars that come our way to support transit in our region, and how they do the compliance and all the things that are necessary to make sure that not only we are good stewards of the funds we receive, but that they continue to flow from Washington and elsewhere to our benefit. So with that said, Mark, I'd like to invite you to the lectern. Thank you.
Thank you, Mary. I liked it back in the day when you just had to have a piece of paper to give a presentation. I've got a laptop, I've got a phone with a timer, and a phone with Karen Hedlund's notes, and now I'm going to have the clicker as well. So if I drop something in the middle of it, maybe if people have fallen asleep, it'll jolt you awake. Very happy to be in Cincinnati, or as my dad said when I landed at the airport last night and I gave him a call. My dad, who lives in Lexington and is a very proud Kentuckian, said, "Oh, you've landed at Northern Kentucky," and always corrects me if I refer to the airport as Cincinnati. So, but just on that note, one thing that I've just been very impressed with today is just how unified the region seems to be in terms of planning and wanting to see the area prosper and move forward. And I think, to the extent that's happening, that is a very good thing. I am going to share a little bit about the RIF program with you. And again, Karen Hedlund, who is Deputy Administrator of the Federal Railroad Administration, was going to be here. Unfortunately, she is ill. But I'm going to just cover a little bit of her presentation. RIF is an acronym, RRIF, for the Railroad Rehabilitation and Improvement Financing Program. And I am going to, after I talk to you about RIF, I'm going to talk to you about the program that I work for, which is called TIFIA, TIFIA, which is the Transportation Infrastructure Finance and Innovation Act credit program. And these are two credit programs that are kind of some of the flagship credit programs at the U.S. Department of Transportation. And as finances or as funding has become more scarce, we're seeing increased use of both of these programs, and certainly interest in both of these programs. So a little bit about RIF first. RIF is administered by the Federal Railroad Administration. It provides long-term financing at favorable terms to eligible borrowers for eligible project purposes, and those are primarily related to rail, both passenger and freight rail, as well as some intermodal type projects. RIF can be very attractive because it can finance up to 100% of the project costs, and the repayment term goes out up to 35 years. So it's a long-term financing tool that provides a lot of assistance because it can do the whole project. RIF offers interest rates at U.S. Treasury, and for whatever the term of the loan is, and then the borrower is responsible to pay for two primary costs in addition to repaying that loan. And that is what's called the credit risk premium, and that pays for what is calculated as the cost to the government for providing the loan. And that is done based on a risk analysis and a credit analysis, which the TIFIA program that I work for also does, although our program's a little bit different in that that premium or that cost is covered by our budget authority rather than the borrower paying that cost. There's also an evaluation charge that RIF has, and that pays for outside advisors outside financial advisors to help evaluate the credit that's being proposed. So what you might be interested in terms of who can access RIF, RIF can loan to railroads, RIF can loan to state and local governments, RIF can loan to government-sponsored authorities and corporations, joint ventures, as long as they include at least one railroad, and certain kinds of freight shippers. And the funds can be used to acquire, improve, or rehabilitate intermodal or rail equipment or facilities, and that can include track components, bridges, yards, buildings, and shops. RIF can be used to refinance existing debt on projects, and it can be used to develop or establish new intermodal and railroad facilities. So a lot of the things that we've talked about today here in the conference, would be eligible for RIF. RIF, or the Federal Railroad Administration, gives priority to projects that provide public benefits, such as improving public safety, enhancing the environment, and promoting economic development. And RIF has the authority, is given authority by Congress to loan up to $35 billion. And as of now, RIF has issued 33 loans worth $1.7 billion in obligated funds. And 72% of RIF's loans, or of that amount that's been loaned, has gone to Class 2 and 3 railroads. So that gives you a little sense of what RIF has primarily been used for. But I think, I don't want to go too far out on a limb since I'm not, working for RIF. But I think, RIF is excited and interested in offering assistance to other types of projects than maybe the ones that have been traditionally interested in the program. So just a couple of things before I kind of wrap up the discussion on RIF. RIF, or FRA, is making a number of substantial changes to the RIF application process. There's been a lot of talk from stakeholders. There's been a lot of discussions with Congress about making RIF more useful for a lot of the kinds of things that have been talked about today. RIF and FRA are streamlining the application review process in an effort to reduce the length of time needed to reach financial close, and just making folks aware of the program and the flexibility that the program does have. I want to share a little bit with you, if I can switch over to this. The RIF program, I'll kind of use this to bridge over to my presentation on TIFIA. There was one project in Denver, Colorado, where RIF and TIFIA worked together and provided credit assistance to the Denver Union Station. There's a picture of it there, and you see the project. It's part of a massive redevelopment project, redeveloping the train station, creating essentially an intermodal transit and freight hub, and there's things underground there that you don't see. There's places for buses to come in. And also, there's just an overall real estate redevelopment as part of that. Now, TIFIA and RIF individually, not all of the costs in that type of project are eligible for the respective programs, but there were lots of parts that were eligible, and that was used very successfully by Denver to do the Denver Union Station project. This is a little bit of minutia, but this just gives you a sense of the complexity of some of these projects, and I've kind of come down to the weeds here, and when I get to my presentation, we'll come back up and speak in a little bit more in generalities. But if you see on the right-hand side, as essentially working for a lender, although it is a government agency, we are a lender. The first thing I look at on the screen is, where does the loan get paid back from? So I'm excited about the projects, but my first question is, how is this going to get paid back? And so on the right side are various sources that the Denver region put together to be able to get this financing. And together with the TIFIA and RIF loans, we loaned in about $300 million to this project. So there's property tax. It's a TIF. There's TIF money in there, property tax, sales tax. There's tax on the Denver metro area, mill levy, and then there's grant money in the project, and then that flows into a central authority, DUSPA, the Denver Union Station Project Authority, who then became the borrower for the loan, and so the funds flow through DUSPA. And again, it was a very successful project and a very successful partnership between TIFIA and RIF. It's a tongue twister to have to say TIFIA and RIF. I'm going to get them confused. This is just a little bit more detail about the some of the structuring on the project. It was a public-private partnership, or is a public-private partnership in a way. I think when you hear people say public-private partnership, or P3s as we call them, it's usually that involves a project company that has a concession or some type of arrangement with a government agency to build a project, finance a project, manage a project. In this sense, it wasn't a true PPP because the public authority is the borrower, although there are private investors on the development side with the residential and the retail. So I'm going to move over now. That's just an overview of the RIF program, and then I'm going to switch out here. Try to. Here we go. Okay. So just moving right in. The TIFIA program has been around since 1999, but it's just more recently became more well known, and I think there's been a lot more interest since MAP 21 was passed. I think some people have mentioned MAP 21 today. Jay mentioned it at lunch. The MAP 21 is the Moving Ahead for Progress in the 21st Century Act. That's the transportation bill that passed in 2012. It expires at the end of September. So TIFIA was substantially increased under MAP 21. We went from about $122 million a year in budget authority in the previous fiscal years to $1 billion this year. And $1 billion in budget authority lets us do about $10 billion in loans. So every dollar we get in budget authority, we can loan out about $10 billion, because our budget is not based on what we loan out. We actually borrow that money out of the Treasury, then lend that money to a borrower for a project, and then pay Treasury back. And the program is assessed a risk premium, like RIF, like I mentioned, or a subsidy cost, as we call it. And then that is what comes out of our budget, and that tends to be about $1 for every $10 we loan. And again, and that's a function of how strong the credit is, which is in turn a function of the revenue source to pay back the loan. And again, we are talking about a loan. We are not a grant program. Our loans do have to be repaid, and in that sense, we're like a bank. So TIFIA can provide credit assistance in the form of direct loans, loan guarantees, and standby lines of credit. As of, we're closing a loan today. I believe that is our 42nd credit facility. 41 of those 42 have been direct loans, 1 guarantee. So people just, they want the money. The objectives of TIFIA are to facilitate projects with significant public benefits. We want to encourage new revenue streams. So we're always interested and excited to see innovative revenue streams. And the program is designed to encourage private participation. TIFIA fills capital market gaps for secondary and subordinate capital. We typically are the subordinated debt in a project. We are a flexible and patient investor. We take on some risk that maybe the capital markets wouldn't take. although we do have, we do want to ensure that the loan will be likely to be repaid, so we do have, credit requirements. And we also, are in the business of limiting federal exposure by relying on market discipline, and that's what I was talking about with credit standards. We definitely do employ a lot of standards that you would see that a commercial bank would look at in deciding whether or not to make a loan. Just a little bit, I'll move pretty quickly because we have quite a few folks on the panel, but these are some of the characteristics of TIFIA that I've talked about. Some of the attractive features are we don't have a prepayment penalty. We love to get prepaid. That's a sign that a project is successful. We've recently had a project that was a toll road project, and it performed better than expected, and so they paid us off early. We are what would be called non-recourse financing. We do take a lien on pledged revenues, and I'll talk a little bit about those in a minute, but we don't typically have recourse to, let's say, the transportation authority, that's the borrower, or the parent company of the public-private partnership entity. We're what people would call, true project financing. We tend to loan out, when we loan to a private company, it's to a special purpose entity created just for that project. And often public entities will create project-specific entities like the Denver project I mentioned. We offer flexible amortization, so we're not like your mortgage where you make the same payment every month for the whole mortgage. We allow some level of deferring payments back to later in the term of the loan, which is a long term. We can go out 35 years after substantial completion. And we also have a up to 5 year deferral period after substantial completion to help the project get on its feet. And finally, a low cost of capital. We offer the treasury rate, and that was recently 3.65%. Requirements. So our major requirements are, we've typically provided support to large surface transportation projects. The minimum size is generally $50 million for the project. There is this was new to MAP 21, there's a lower threshold for rural projects of $25 million. We do not loan more than 33% of eligible project costs, and so we're different from the RIF program in that respect. We don't go above 33%. Our statute does allow us to go to 49%, but the department has chosen to keep that at 33% to encourage, other participation in the projects, and to make sure that the federal dollars are being leveraged to the greatest extent possible. If we go higher than 33%, the leverage we can get with those budget dollars is lower. Part of our credit assessment and our credit requirements are that the senior debt in the project, and if TIFIA is the senior debt, this applies to TIFIA, it has to be rated investment grade by at least 2 rating agencies, unless the project cost is less than $75 million, and then there's only 1 rating required. So if TIFIA is subordinate, the senior debt has to have these credit ratings, investment grade ratings. If TIFIA is senior, then the TIFIA debt has to be rated investment grade. And of course, as I mentioned, there have to be dedicated revenues for repayment. Talk a little bit about that in a minute. There are federal requirements that attach. Civil rights requirements, NEPA, the NEPA process has to be done before you can get TIFIA credit assistance. Not before you come and put in a letter of interest or apply, but before we close, the NEPA process has to be completed. Buy America, basically anything like on a highway project, a bridge project, anything that would be normally required under Title 23 for highway dollars applies to TIFIA, and on the transit side, the transit requirements would kick in. And then we can also provide support to other kinds of projects as well, and I'll run by that in a minute. The last bullet there, we do allow our borrowers can be public or private, and we can provide assistance to highway, transit, rail, and port projects. The application process is projects need to put in a letter of interest, where creditworthiness is evaluated and project eligibility, and then a formal application can be submitted after an invitation to apply comes from DOT. So here are our applicants and projects that we can provide a credit assistance to and for. On the left side, we can loan to state governments, private firms, although the private firms have to have a public sponsor. So, for instance, the project has to be in the STIP and the TIP, the State Transportation Improvement Plan, the Metropolitan Plan. So there has to be public sponsorship. There has to be a public entity that is sponsoring that private entity, so we can't just loan to any private company that comes in. That's another difference with RIF. RIF can loan to private railroads for various project type costs. But we can only loan for publicly sponsored projects. We can loan to some other types of special authorities and local governments, and this gives you an idea of the types of projects we can support. It's pretty broad in terms of rail. It's very broad in terms of passenger. On the freight side, it's a little narrower. It's more related to intermodal type facilities. And then on the transit side, we can loan to transit projects, vehicles, various types of highway projects. And there's increasingly, more interest in supporting rural projects and smaller projects, but that's not a selection criteria. In fact, we used to have 8 particular selection criteria prior to MAP 21, and now we are a first come, first serve program for eligible projects. In terms of eligibility, I talked about creditworthiness. We look at things like adequate debt service coverage. We look at the investment grade ratings. We look at cash flow. We look at detailed financial models. It's a very robust diligence process. The statute requires us to look at whether or not the project fosters public-private partnerships, although we don't take a really narrow view of what that might mean. We look at some of these other factors, proceeding earlier than otherwise would have been able to, and reducing federal grant assistance needed to complete the project. This is an outline of our process. I won't go into too much detail here, but essentially the first step is submitting a letter of interest. We do require a $100,000 deposit be put down after a project goes into the creditworthiness evaluation. So we get the letter of interest if it appears at least to be basically eligible and have a legitimate creditworthy package. We'll invite we'll ask the sponsor to put this deposit down, and then we'll go into a more robust credit analysis. That deposit is not just a fee, it's actually a reimbursement for costs. So we hire outside legal and financial advisors to evaluate each and every loan to ensure that there's an independent, there are independent experts evaluating the credit and the project. We have project sponsors come in and make a presentation. If everything's, seems to be checking out, we invite an application, and then this gets reviewed by the staff and then is presented to what we call our credit council. It's like a credit committee at a bank, although it's a government entity, so it's not exactly parallel. And then once that, they provide a recommendation to the Secretary of Transportation, who then makes a decision of whether or not to approve the loan, and then we enter into negotiation on a term sheet and a loan agreement. And in terms of that negotiation, we have flexibility in terms of we sometimes will go into existing trust indentures or bond indentures that local governments or authorities already have set up. So we have flexibility in going into those kind of financial structures. We also are very experienced in negotiation of intercreditor arrangements with other lenders, with banks. And so we have a lot of flexibility there. We do have a standard loan agreement that's on our website and a term sheet that gives you, if you really wanted to really know what all we would require, you can go to that term sheet and loan agreement, and it will give you a lot of information. So once the loan is negotiated, if terms are acceptable, we go to closing, and closing means that we obligate the funds, and those funds are set aside for that purpose only. But we don't disperse at the closing like you would, say for a home loan where it just all goes out that day. We reimburse sponsors and or borrowers as they incur project costs and submit reimbursement requests to us. This is another way to look at the process with some other things in there with the NEPA process. I mentioned the $100,000 fee up front. The total of those fees usually ranges in the $300,000 to $500,000 range, and borrowers are required to pay us for that once we've incurred those costs and have submitted an invoice to the borrower. And that part of it, there's some pieces, most all project costs can be financed with TIFIA. Anything that is related to the cost of getting the TIFIA loan, though, cannot be financed, and it cannot be counted as an eligible project cost. So that fee could not be counted, and getting the rating letter for TIFIA couldn't be counted. But getting the rating letter for the senior credit or the bonds could be counted. We do have an annual loan servicing fee that, as of now, is about $12,000. Here's an idea of just kind of coming close to the end here. Here's just a map that shows where we've done projects, where these are all closed loan projects. Some of these have been repaid even. And, around here, the most recent, or the nearest one to here is we just closed a loan in November for the Ohio River Bridge in downtown Louisville for $452 million. We also have a letter of interest for the Indiana bridge. I mean, both bridges are in both states, but Indiana's doing the other bridge, and we're looking at that. And we also are reviewing a letter of interest from the Ohio Department of Transportation for the the Portsmouth bypass, which is a bypass around Portsmouth in southeastern Ohio. But you can see we've kind of been all over the place. The majority of our projects have been highway projects, but we're seeing more and more transit projects, and we're really excited to see. We've seen a few intermodal projects, and we're very eager to see more of those. Here's a list. The one thing I'll point out to you over on the right side is those are our revenue sources for all these different loans. So a lot of them you see user charges. That's typically a toll road or a toll on a bridge. We have sales tax, so we've had localities levy a sales tax, and then we get a dedicated portion of that. We've had some real estate tax increment, and we also have had motor fuel tax and other project revenues. We've even had some airport projects. We generally can't do airport projects, but there are parts of airports that we can do, like consolidated car rental facilities. We can do things like the train system that carries passengers to and from the airport. And in those cases, we're being paid back through passenger facility type charges, not actually passenger facility, not the ones that you pay with your plane ticket, but customer facility charges that are paid when you rent the car. This is our credit council, made up of various members of the department leadership, and this is our website. We are TIFIA is housed within the Federal Highway Administration, but we're obviously multimodal, and we function very much as a department-wide program. Our website is within the FHWA website, but if you just Google TIFIA, T-I-F-I-A, it'll come up. There aren't many things in this world called TIFIA. My address, or my email address and phone number are there if you want to jot those down, but I'd be happy to talk to you after or during the questions. Thanks.
Well, thank you. And if you have questions for Director Polston, please make sure that you write them down and send them forward. I think that we could say that you are fairly brave bringing up the words bridge and toll in the same sentence in our market, but it's a topic that's near and dear to our hearts. We have a bridge we've got to get built, and we're going to try to figure out how to do it. So thanks for reminding us that there's more than one way to skin that cat. in our preparation call, Administrator Headland mentioned something that Mark also addressed, but perhaps not in this language, which really stood out for me about the RIF fund, which is that for the kind of work that we might be doing here, there is $7 billion available, and the current utilization of those funds is about 5%. So 5% of $7 billion in funding leaves a whole lot of opportunity on the table for people across the country, but obviously for us here, if we get smart about how to tap that resource. I also especially liked you're using Denver Union Station as an example. If you have not been in Denver since that project has started and you are very interested in both transportation but also in transportation-oriented development, I encourage you to find a way to get out there and see what's happening there. It's an astonishing project. The scale of the station itself is much like the one that we have here, and a wonderful historical building. But the way they are using it as a lever to build a whole new neighborhood adjacent to the Lodo section of downtown Denver, and doing it with a really brilliant public-private partnership that actually reduced the cost of the overall development by half. And we're talking development in the hundreds of millions of dollars. So it's a great example of how the public sector and the private sector can work together to revitalize whole sections of our communities. So it certainly is a great example for us today. And then to your point about TIFIA being patient capital and taking that approach, we also have a history here in Cincinnati of using patient capital, particularly from our philanthropic side of the community, to invest in community investment and help rebuild communities. So we understand the concept of patient capital, and I think we'd all love to have more loans that came in at 3.65% interest for a 35-year note. So all great food for thought for us. Mark, thank you so much for your remarks. We really appreciate it. There's already money in the market. There are opportunities that exist right here at home every day. And the chief responsibility for monitoring and controlling and passing through the dollars that come here for transportation are with our Ohio, Kentucky, Indiana Regional Council of Governments, also known as OKI. And Bob Koehler is going to tell you a little bit about what opportunities are already existent in the market. Bob.
Well, thank you very much. I get asked the question or the comment made to me more often than any other in that, hey, Bob, I got this project I need some funding help with. And so I think I was asked to be part of this conversation so that I could express or inform, though this is not an innovative financing, this is hopefully very informative about OKI finances. We have some great opportunities every year. This year, for 2014, however, we are limited in Ohio as compared to Kentucky. We are having a call for projects in our Ohio counties, as well as an ongoing effort as a call for our Indiana counties. Let me back up just a minute and talk about the types of funds that OKI works in. We have access to federal transportation dollars, and you see the categories on the screen there. Surface Transportation Program, which we call STP, Transportation Alternatives Program, TA, Congestion Mitigation Air Quality, and in Indiana, the Highway Safety and Improvement Program. STP turns out to be our most flexible pool of project funds. Essentially, any transportation project as determined under Title 23 of the Federal Code is eligible for STP program. The STP program is a reimbursement program in that it's not a loan, it's not a grant, it's a pool of funds that the applicant can win and use towards eligible project costs and then get reimbursed up to, generally speaking, the 80% level. Transportation alternatives, that's a relatively new program under MAP 21, and as you can see, they're set aside for things like safe routes for schools, safe routes for non-drivers, preservation of certain historic transportation facilities, turnouts, overlooks, and items of that nature. CMAQ program has evolved over the years. Currently, the program is housed under a statewide program, though OKI is still very instrumental in the allocation of those funds. The program is eligible for projects that reduce emissions, things of the type that would improve travel time, reduce delay, like improving signalization, geometry of intersections, the diesel emission retrofit grant, rideshare and ozone programs, things of that nature. We have a small category of funds available to us in our Indiana County of Dearborn, the Highway Safety Improvement Program. There are a number of eligible items under that program, but suffice it to say that any projects that improve travel safety are eligible under the HSIP. Again, this is an Indiana-only program, and I won't go into much detail about it, but if you're interested, you can always give me a call at the office. Bob, how much funding does OKI have available for this year's call? And you see on the screen, we will have about $32 to $35 million. Is our plan to overprogram a little bit to compensate for project cost changes or delays in certain projects, that kind of thing. We've already dipped into our fiscal year 17 funds a little bit and a little bit into 18, so our large source of funds is for fiscal year 19, plus the leftover from 17 and 18 to give us that $32 million level for our STP program. On the TA side, we have a more immediate need to get some funds into projects for fiscal year 16 all the way through 19 for a total of about $11 million. So we're looking forward to receiving a number of good applications in both of those programs for our Ohio counties. More on the timing of those things in just a minute. I'll go kind of rapidly through Indiana. We have all funding categories there, all open, ready, waiting for good projects. We don't have a very formal process there, but we still do require an application to come to the office. Then we will coordinate with the county and the county commission and the mayors of Dearborn County to help figure out what are the county's priorities there. Kentucky, like I said earlier, we're not having a call for Kentucky projects this year, but we anticipate next year about this same time to have a call for roughly $10 million in the Kentucky STP funds, and as well as a somewhat modest compared to Ohio, but $860,000 or so on the Kentucky TA side. Here's a timeline, kind of put this picture in your mind. I'm going to talk a little bit in more precise fashion, but the program is open in Ohio, and CMAQ will come later in the spring. Indiana remains open until expended, and nothing in Kentucky at this time. Here is the specifics about the STP program. We're looking for funding for fiscal years 17 through 19. The maximum is $6 million per project. You'll need to come with a very well thought out project. A local match will be involved, so your project will need to be engineered to the extent that you can have solid cost estimates, as well as have the political and public support of your project behind it. The call is just underway, and it will run through March the 28th. Our board will then take action on the list of projects that compete for this funding category at our June meeting. Same time frame for TA. The maximum amount for funds is about $500,000, or not about, but $500,000. Again, those projects also do require a 20% local match. CMAQ is now a state-operated, not state-operated, but a state program that is operated in collaboration with the large MPOs in the state. Near the end of this whole process, the executive directors of the large MPOs will review the work of their staff in reviewing the projects, and then the boards of the various MPOs will solicit their ranked list of projects to the executive directors, and the executive directors will then select for funding the list of projects. There's Indiana again. It will remain open until expended. And then if you have any questions, go to our website. You'll see the funding category there on the upper right hand. It's got all the links, got the applications, got more information, and it has contact information there. Myself or Mark Payne or Summer Jones in our TA program. So there you have it. Sorry I went through it kind of quickly, but we have a number of other good speakers here. Those behind me will speak to the, I think, a little bit more in the actualization of the use of a lot of OKI funds. Those STP funds that I talked about have been put to good use by the various counties, cities, the TIDs in the region. So I'll leave it right there. And Mary, that's my presentation.
Thank you very much, Bob. We appreciate that. And I think if there's one word I would use about what you had to say, that it is now. The time is now if you want to be in the queue for funding that's available and will become available in the next couple of years. Those of you in respective jurisdictions know that, but it always begs reminding that deadlines are looming. I think it's interesting the wide range of types of projects that you cited that are eligible for these funds, and it got my brain going about things like our growing new Regional Trails Alliance, for instance, that is taking advantage of a lot of old rights-of-way and other opportunities to build some connectivity throughout the region. So lots of opportunity in what you had to say, Bob, and thanks for presenting that so cleanly and quickly. Next up are Randy Schuermann of Kegler Brown, who is counsel to our Transportation Improvement District, and again Ted Hubbard, the Hamilton County engineer, who I think are going to tag team on the topic of how we're using the TID effectively to get stuff done.
Good afternoon, everybody. Thank you for being here. I'm Rusty Schuermann, and as Mary said, I serve as legal advisor to the Hamilton County Transportation Improvement District, or TID as we lovingly refer to it and others like it. We have worked for 21 years now with TIDs, going back to the beginning in Butler County, which was the first TID. The TID legislation was incepted in 1993. The idea was, in a time not unlike what we're dealing with right now, there was a real difficulty in finding federal funding, and there was a lot of frustration. There were needs to build out projects, and there needed to be a better way to do it. So the legislation was passed, which really enables local governments to come together under the umbrella of the TID and recognize certain efficiencies and some ways to streamline projects. But there's also a philosophical kind of policy motive behind it, and that is there is so much in the way of siloing and parochialism that needed to really be deconstructed, it was felt, and to bring people around the table so that there could be meaningful dialogue and collaboration. And the way the law is structured, there can be a pooling of assets through the TIDs by the local political subdivisions that are engaged with it, so that assets can be combined, intellectual, political capital can be combined, and there's an effort then to work forward using those that capital, particularly the pooled pledge of revenues, to leverage some of the funds that Bob had made reference to, or in the appropriate situation, as Mark said, a TID could be involved in a TIFIA program. There are any number of approaches that are available depending upon the project, the particular jurisdictions the assets that are available. It gives a lot of flexibility. The TIDs I've worked with all are unique and different in their own way. A lot of it is because of their politics, because of their assets, because of their projects. But the bottom line is they've all been very effective and have been able to deliver some very important transportation improvements that were always thought of, strategized with the marriage to economic and community development that, again, there were needs for in their areas. A lot of what these TIDs have done is they have looked at, it reminds me of something Richard Dial referred to today. There's a lot of talk about transit-oriented development. There was a lot of automobile-oriented development with some of these TIDs or other commercial development, which it was realized that the transportation network, if it was built out, there were opportunities to put tax increment financing or TIFs in place, joint economic development districts. There were, in some instances, voluntary assessments. The engineers have motor vehicle gas funding that they could contribute or pledge. It was basically an amalgamation of funding that was then parked with the TID, who then could apply to OKI for STP or CMAQ using those pledges as local match, or in instances like Butler County, there was a $158 million TID bond issue to build the Butler Regional Highway. So there are many options and alternatives. It just depends on the projects. But let me have Ted give you his perspective. I'm kind of rambling on here.
No, you're doing a great job.
Ted's got a unique perspective on this, as he and I have worked together on the Hamilton County TID now for 11 years or so anyway.
Well, thanks, Rusty. Yeah, my name's Ted Hubbard. I'm the Hamilton County engineer. And just to let a little of you know about county engineering, in Hamilton County, we administer a program that maintains about 1,200 lane miles of roadway for snow and ice removal, which has been exciting. It's about 1,800 lane miles, because we collaborate with the state. My wife works at Xavier University, and a lot of her colleagues jokingly called me the road man. So why would a road man be so interested in multimodal transportation and trying to find ways to make the transportation system better? Well, I'll tell you why. It's not just about roadways, and it's not just about transportation. That's the thing we have to understand. It's also about economic development and growth. One of the things that we're learning, and it's a sad fact everywhere you go, is that our demand for transportation is exceeding our ability to fund it. Furthermore, the funding sources that we use are restricted. They're constitutionally restricted. Roadway dollars go to roadway. Many transit dollars can only go to transit. Now, and a lot of the folks that I talk to seem to like those types of restrictions, but that doesn't mean we can't collaborate, and that doesn't mean that we can't get a better transportation system. It's in our best interest to collaborate, to marry transit and roadway improvements and other modes as well together, because right-of-way costs are going up dramatically, and the impacts that we create when we come in separately are greater. We are better to marry these activities together. We've learned that in Eastern Corridor Project, and that's exactly what we're doing. The Eastern Corridor Project is bringing multimodal connectivity, new multimodal connectivity to the region, and we are working together to try to marry these components together so that they work together. HDR is our consultant on the OASIS component of the Eastern Corridor Project, and their economists came, and I won't let anybody forget this. Their economists came to us and said, when you marry roadway and transit together, it's not 1 + 1 = 2, it's 1 + 1 = 4. And I believe that is absolutely correct. I'm going to tell you why, from a conceptual point of view. First of all, what this does is when we work together, when we have both transit and roadway work together, what it allows us to do is blend some of these restricted funds together. It can help us in the capital costs. If transit funding comes first, it can help pave the way or blaze the way for another mode, maybe roadway, maybe bike, whatever. The opposite is true as well. You don't always know when the funding's going to come. If the roadway dollars come, then what happens is as the roadway goes, it can make way for the transit amenity. This flexibility is extremely important. It reduces impact. Furthermore, when it comes to operational costs, it's much, much better to have a multimodal project working together. Why? The rail helps reduce the footprint of the roadway. No question about that. But the roadway also helps expand the market area of the transit-oriented development. We've learned as we work through the Eastern Corridor project that the market area, the radius of the market area of the transit-oriented development is about a half mile. For a 35 mile an hour, if we have a 35 mile an hour parkway that also feeds as transit-oriented development, that can expand that market area to 5 miles, a radius of 5 miles. More customers, more opportunity to garner dollars for operational costs. And operational costs are very, very serious when we're talking about operating transportation amenities. I think that, the Eastern Corridor, I think project is a project that could be a model for the entire country. I don't think there's any question about that. The TID has given us an opportunity to take funding to get to garner bring our funding together, and also to be able to contract in a more efficient way. The flexibility of the TID has made it very, very possible for us to move the project forward. I definitely think this is what we have to do in the future. I think transportation projects we've got to find ways in which we can marry different transportation projects together, especially new infrastructure on new alignments. We need to do that so that we can maximize the benefit. And I do believe the Eastern Corridor project, through the TID and with the help of the Ohio Department of Transportation, is going to be a project that'll be a model for the whole country. Thank you.
As Ted said, I think the TID provides a fantastic vehicle and has served as the vehicle for the Eastern Corridor since after the major investment study in the 90s and the decision was made to pursue the project. The advantage that it brought was the ability to utilize the TID's basically unlimited contracting ability with local governments to identify pledges of revenue that came in from the city, SORTA, OKI, Claremont County, and the Hamilton County engineer and Hamilton County, and basically utilize those funds to match funds through ODOT and to basically kick off this environmental impact study process, this preliminary engineering and environmental process that the federal regulations require on a project, a mega project like the Eastern Corridor. And the advantage as well, because it was such a significant and complex project with very important environmental issues that had to be carefully scrutinized and studied, and of course other issues with respect to the various modes, the EIS, or the environmental impact process, was tiered. It was basically split up into parts. So Tier 1, or Part A, was paid for in significant measure by the pledges of local revenue through the TID, which then were reciprocated by ODOT. Now, with the successful conclusion to that work, that the TID with its partners, the city and SORTA and OKI and the counties, Claremont County, we got a record of decision and we move into Tier 2. Well, again, I see Jim Blunt, who's the chairman of the Butler County TID, and I think he can attest to this. Once you get some momentum and you complete a significant portion of a project, a lot of times ODOT and Federal Highway and some of the other funding agencies are more encouraged to commit funding. And with the Eastern Corridor, for example, ODOT saw the fine performance, the sacrifice and commitment by the locals. As a result of that, the Tier 2 work in the Eastern Corridor was funded by ODOT. A $20 million infusion of funding was provided. It's that kind of partnering. You know, the baton gets handed off as you make the laps around the track on these mega projects. And now we're getting to that next stage where we're going to have to identify other funding sources and other ways to approach it. But the importance is to keep the momentum going, because the need is so critical to the area. And, you know, everybody's got to pitch in and do it together if we really want results.
Agree. I think, as I said before, I think it is critically important that when we plan new infrastructure, both transit and roadway, that we try to find ways where we can marry the two together. Transit is an important component of our transportation system. It helps both transit and roadway help develop new development. And the one thing that we need to be doing is making sure that when we plan these different components, that we also use land use, that we examine the land use. We engage the communities so that we have an understanding of how those communities want to look maybe 10, 15 years from now. And that's exactly what we did with the Eastern Corridor project. And I think what that does is that when we do go to spend our dollars on construction, we'll do it more efficiently, because one mode's not going to block the other. But we also get the benefit of not having the kind of development that we saw maybe in the 60s and 70s with the interstate system. We built an interstate system, and yes, it has delivered, and we've asked it to do more than we're asking it to do more and more all the time. But the problem we got is we ended up with development situations that aren't maybe in our best interest. Through planning, but through planning with communities and also looking at all modes as we move forward, we have an opportunity to get the development where we want to and have more sustainable communities. Thank you.
Thank you.
Thank you so much, Rusty and Ted. That was really interesting, and I think it was especially interesting to think about the fact that all too often in our prior conversations, the idea of roadways and transit has always created tension, and you've reminded us that opposing forces in the past can now be integrated, and integration is certainly a key word for our entire conversation today, especially if we take a long view of what we're trying to accomplish. With true integration, we can achieve greater impact. And Ted, I think you said it really well when you said this is really not just about transportation, which after all, if you'll excuse the pun, is merely the vehicle, but it is really about economic impact and building a strong economy. So that's a great way to bring together that theme of integration for the day, and I thank you both for your comments. Our last speaker is Terry Garcia Cruz, the CEO of Metro, and she's going to talk to us a little bit about the role of a regional transit authority and the management of funding from the federal government, but I think she might also give us a little sense of the recent study that Metro conducted on how we're doing in this region compared to the peer set that Agenda 360 developed along with Vision 2015 in Northern Kentucky to say, not only how do we stack up as a region in the absolute numbers, but how do we stack up against those regions that we compete with for people and jobs. And Terry and her team recently took a deep dive into how we stack up when it comes to transit against those peer regions. So the floor is yours, Terry.
Do you need to stand for a minute? Because I won't stand it for a minute. Get the juices going again. Does that feel good? Stretch it out. Yeah, like a cat. Oh, does that feel good? Just don't leave me, okay? We're almost there. You guys have been phenomenal, and thank you for just being here. Transit and just the integration of rail and what that means for our region is phenomenal. And I applaud Mayor Cranley and Commissioner Fortune for having this summit, getting us together, and really talking about this from an integration aspect as well as just kind of a regional flavor. There's been a whole lot of discussion from the group up here about collaboration and partnership. And so what I'm going to do with my presentation, and I promise it will be brief, is to kind of highlight, once we get those dollars into our community, what are we going to do with those dollars? And there's also been some discussion about the composition of the SORTA board. And I think there's still some board members in the audience, believe it or not. So I want to acknowledge them because they're totally volunteer, but very dedicated individuals. I believe Ken, stand up, Ken Reed. He is our vice chair. Are there any others that are still left with us? All right, just the diehards. Awesome. Bob Koehler, I've got to ask you a question, because did you use that quote off of a conversation you and I had? Hey, Bob, do you have any money? I've got this great idea. I've got this great transit project. Is that it? Okay. With that said, let me go ahead and get into what I plan to highlight today. And sure you are. Forward, right? Yeah, you know what? I think it died. That's all right. You know what? We'll just arrow through it. No big deal. I'm frozen.
It is frozen.
Anybody have a joke? Yeah, we do. That's right. It could reduce some air quality. There's CMAC. We're waking it up. Yeah, I guess we shouldn't have taken that break. The computer took a stretch too. Sure.
How can SORTA use Ohio grant funding to complete capital projects that enhance trunk lines to lower operating costs and increase ridership?
Wow.
That's a big question, isn't it? Let me give it to you so you
Okay.
can see it here. Yeah. From a UC student.
Okay. How can SORTA use Ohio grant funding, TA or STP, complete capital projects that enhance trunk lines? Oh, I like this. A rider, I can tell. 43, 90, 17, 78. Where's my operations people? To lower operating costs and increase ridership. Well, what I can say in reference to the funding aspect is that typically we use the state funding for major capital infrastructure, i.e. bus replacement, facility improvements. In terms of the operating aspect, there are some federal dollars that allow us to use it for just basically preventative maintenance and operations. In terms of what you've just suggested, whoever that was in the audience, and really enhancing the trunk lines, what we have had to do is do a COA, which is a comprehensive operating analysis, and looked at unproductive segments of our routes, and took those areas and we took those service miles and we reallocated them into areas that we're not currently serving. So we kind of trimmed areas and then expanded in certain areas, and we were able to offer more cross-town routes. We also did a comprehensive outreach. There was a lot of discussion earlier about really designing the transit system that's tailored towards what the community wants. We actually had 50,000 touches as far as trying to figure out what people wanted in this community. So we have short-term transit enhancements, and a lot of that information came across as cross-town routes, more express routes, more bus rapid transit. How many of you have seen that blue bus, that really kind of sleek? Woohoo! Raise your hands. I call it my head-turner bus. And that's kind of what is pre-BRT. So to answer your questions, we really looked at at taking some of those existing funds and reallocating them where we can to be more efficient. So that's one area. That bus rapid transit, the pre-BRT, it's not really, you're going to hear this a lot. I've been seeing this in the newspaper. Some of our leaders have been talking about it. True BRT basically is allocated roadway where you can actually take your bus and expeditiously take it down a particular route or corridor, and you have a dedicated right-of-way. It's really tough here in Cincinnati to get that level of flexibility. So what we've done is we've kind of call it pre-BRT, which is kind of taking baby steps and kind of making sure that this community is going to embrace this particular concept. I can say that it's taking off. We've got about 15,000 people a day, 1,500 riding this that particular route. So people are really liking it. Are we doing okay? Okay.
Terry, I can add to that question about the STP and the TA. Those are capital funds, and they would not be eligible for use for operations. Now, CMAQ, there's a possibility for new startup or expanded service to be an eligible expense there under the CMAQ program, but not STP or TA. You can buy buses, you can buy bus stops, you can build park and rides, but you can't use it for operational costs.
What other questions did you might have for the group here?
This question is, I noticed most rail transit improvements and ventures are focused on eastern Hamilton County, and I think this means to say outward. So the question is concerning rail transit. Are there any extended plans for western Hamilton County and southeastern Indiana? Ted or Bob, I think you might be best to address that question.
I'll go ahead and address that. The rail plan that was completed in 01, 02, you may have seen the map at lunchtime, or it was in the hallway. It does, in fact, show some corridors there, and the OKI 2040 plan does preserve right-of-way for many corridors in the region, including those. As was discussed earlier, the Eastern Corridor, behind the leadership of many, but especially Commissioner Portune, has kept that as a relevant item. And for many years, more than 20 years before I came to OKI, the Eastern Corridor was recognized as one of opportunity, 2 of utility, and 3 having public and political support for that project. So, and you have people like Ted that can speak in more detail about that, but there we have it. We have right-of-way in the plan for the OKI Regional Rail Plan. And I think you'll see some progress as the success of the Eastern Corridor begins to show itself.
Mm-hmm. Ted, did you want to add to that?
Well,
Please go ahead, and then we'll get Terry back up here.
Well, really, there's not that much more to add. I think Bob answered the question.
Okay.
I mean, we've been working, on the west side. Obviously, we're going to honor any corridors that, that are identified through OKI. If we have any major capital improvement project, we're going to honor that. We don't have any transit corridors identified in the Hamilton County Engineers Thoroughfare Plan per se, but any improvement that we would propose, we would honor a corridor that is identified through OKI.
Okay, and if that didn't fully answer the question, then we'll come back to that at the end. And Commissioner Portune, would you like to add to that?
I just want to add one more
Yeah,
piece to
please
that,
do.
if I may. The thinking with respect to going west has been largely tied as well to the Midwest Regional Rail Initiative, which is the high-speed connection between 5 states, roughly 15 cities, one of which was a Chicago to Cincinnati high-speed rail connection. And the thought with respect to local service, Cincinnati to Dearborn County, Lawrenceburg in particular, was to piggyback off of the improvements that were being made with respect to the Midwest Regional Rail Initiative, largely for purposes of cost. Whatever we could do to piggyback off of that initiative would be very beneficial from a taxpayer's perspective in introducing local service and track that way. Unfortunately, the current climate in Columbus does not have Ohio actively participating in the Midwest Regional Rail Initiative, and so things like the Chicago to Cincinnati connection have been put on the back burner with respect to that, as opposed to being on the front burner. But there is, as both Bob Koehler and Ted Hubbard mentioned, there's always been a view of introducing local service west in addition to east. The manner is somewhat different in terms of the funding approach, and the timetable, of course, is different. That work is not nearly as far along as is the Eastern Corridor program, but it would be the same type of DMU service on existing track and right-of-way.
Okay, great. Thank you so very much. And now I'd like to turn the lectern back over to the very patient Terry Garcia Cruz.
Got it. All right, yes, thank you, Paul, and accompanying folks. So there was reference made earlier about how we stack up with peer communities, and we engaged UC Economic Center to really kind of tell us exactly how we stack up. And these particular areas in the peer cities are those that the Agenda 360 actually use as comparison. So you can see kind of in the blocks there what cities are the ones that we compared ourselves to. These cities have what's called multimodal operations, i.e. they have rail, they have bus, some have streetcar. So if you look at those communities, we actually are number one in operational efficiency and number 7 as it relates to service. So the service that's provided for Metro, SORTA, basically we rank 7. 1 to 12 was the rating, so kind of give you a kind of a reference point. And the state and local funding isn't really kind of new news to us. We're about 10, so we're kind of back of the pack there a little bit. Here you've got a little bit of an example of what is available from the Federal Transit Administration. There are a lot of communities that are competing for these federal dollars, particularly under the New Starts program, which is a 5309. And typically with the New Starts program, whoever applies for those dollars are usually the actual recipients. The applicant and the recipients typically are the same. And there's a scoring process that kind of rates the community in terms of high, medium, low, medium, and then basically they decide from that point really what's going to go forward. As we all know that those dollars are definitely drying up. I know when I go to various conferences through the American Public Transit Association, they're talking about how the highway fund, which basically funds transit at about a penny out of 18.3 cents on the gas sales tax, is really not enough to fund all the aging infrastructure that we have, our buses or whatever else we may be having to fund. We also have the discretionary program, and there are other FTA financing options like capital leasing, revenue bonds, debt service reserve, etc. We had a phenomenal presentation on the TIFIA, and we now know the timeline that Bob laid out for us as it relates to other funding that we need to pursue. So those are some funding options. So once the dollars come into our particular community, SORTA is the FTA grantee. And so we have many, many relationships that we've already established as those federal dollars flow into our community. And we have the ability to tap into the reporting system because there's just a lot of requirements as it relates to once you get these federal dollars. And so one aspect of SORTA that we really are conscientious about are all the federal requirements, and that we ensure that even though someone else is using the monies, we actually have that liability. So if that subrecipient relationship, if those regs are not being followed, guess who gets blamed? Okay? So there's actually a segment when they come out and do our triennials, how well we're actually overseeing our subrecipient grants. And I know I saw Chris Eilerman earlier. I mean, he knows how we have to really work in concert as it relates to the streetcar project to ensure as those dollars flow to the city, they are in fact compliant with all the federal regulations. So that's really critical. And there'll be a slide in here kind of showing you a little bit of other relationships that we've established. Here are some of the requirements. We have a master agreement. We also have certification and assurances. Under each particular area, there are about 23 to 30 areas of compliance that we have to look at. There's also the scope of the grant contract, which is scope, schedule, and budget. And we also have to ensure that when we are doing these projects that they're on budget and they stay within the scope. Because sometimes there's a tendency to say, well, let's do this. Whoa, what did we say in the grant application? We need to make sure that we, in fact, are executing what we've already established in the application. There was reference earlier to Buy America and the NEPA, National Environmental Policy. So there's all these aspects that I'm comfortable to say that we have a phenomenal team at SORTA that understands all these regs. And our director of procurement understands the regulations as it relates to how we're going to procure these dollars and make sure that we're compliant with all the circulars. I think we've actually gone through, 2 or 3 procurement audits within the last 18 months. Is that about right? We just went through a triennial review of an FMO, which is a financial management oversight. So we call it in-house. We get a lot of federal love, but that's okay. We like it. Here is just an example of when those federal dollars, hallelujah, they come to the greater area of Cincinnati, and we actually start using those dollars, and SORTA is the primary recipient, and then we go ahead and designate those funds out. Those are some of the areas that we've already have established phenomenal working relationships and collaboration. You've got the City of Cincinnati, Butler, Claremont. We have an Everybody Rides Foundation. I've already mentioned the streetcar, and there's various other entities too that have been very, very positive working relationship and really has helped them achieve what they need to achieve as it relates to transit in their communities. We talked a little bit about some of the FTA oversight. Those are kind of the blocks that kind of reiterate what we have to do. We have a project management oversight contractor for those really big projects. FTA will actually bring in a team and they'll make sure that we're actually, every aspect is being followed. I've mentioned the triennial, FMO, procurement, and then various other audits along the way. So it's really important that we're innovative as a community, as well as the fact that realizing that the federal dollars are very tight, it's very competitive. I think the fact that's in our favor is that we're already talking about this on a regional level. I think that really fares well for us. I know when I go to the FTA in DC, as well as talking to our congressional delegation, we get a lot of kudos because we are collectively talking about what we are going to do in this community. And I'm hearing more times than not that other communities are not talking together. So I think this is kudos to everybody in exploring how we're going to bring transportation and integrate it in our region. And we can talk about it when we go to the Hill. So with that said, I'm going to turn it back over to Mary. Thank you for your patience through the technical difficulties and those of you who helped out.
So stay right here, Terry, because the first question up is also for you.
Okay.
Which is, do bus rapid transit and rail target the same niche? And I believe that the question is addressing market need. How can BRT and rail work together?
Okay. I think that there are two different demographics as it relates to BRT and rail. Rail typically is your, as we mentioned earlier, the people that want to drink the green tea, be on their laptops. It's usually a longer commute time coming from outlying communities. We've seen this in Austin. For those of you that may not know, I was in Austin for a while, and that's what we saw was just those longer commutes really kind of dialed into a different demographic. BRT, I think, helps us in the sense that it helps us in the inner city and tapping into those corridors that really kind of are more origin destination, more intense, i.e. for educational purpose, medical purposes, academics. We're seeing a lot of that kind of flow with Metro Plus. Based on employment, there are a lot of folks that are going out to Kenwood to Uptown, going to Xavier, going to UC. And so I really think it's based on origin destination, and it's two complete different demographics.
Do we have additional questions? Do you go? Please go ahead. I can repeat it if you want to just. No, you can go ahead and just ask the question. That's fine. Oh, okay, so the question is, was Tank invited? Is Andy still here? Yes. Yeah, so Andrew Aiello, who runs Tank, is in the back of the room. And although today's conversation was largely about what's happening here, I think, in Hamilton County, I think the whole point, and if Commissioner Portuna is in the back, he can reaffirm this, is to bring this conversation to the regional level. And I can tell you that I've been at tables with Andy Aiello and Terry Garcia Cruz and the Butler County Transit Authority and the Claremont Connection, and lots of other folks who are intimately familiar with what the needs are in our larger community and where we need to go. So absolutely, there is a conversation going on to bring those assets together from a sort of wonky standpoint. We like to talk about things like we have fare box parity today, which means that in not too distant future, you will be able to move from the Tank system to the Metro system and not feel like you've made a change and do it quite seamlessly. And that's just one example of the way that we're collaborating. Does that answer your question? Okay, others? Bob, did you have any to? Okay, all right. While we're waiting for those questions, Terry mentioned, bus rapid transit a number of times, and again, just as a best practice, if you have not been to Cleveland lately, the Health Line in Cleveland, which is a 9-mile corridor that connects Public Square, where 40,000 people come in to go to work every day on rail and buses, to University Circle, is a true, if not true gold standard, certainly very high standard bus rapid transit line that is worth the drive to Cleveland to see and to ride to get a sense of what that could mean for this community if we were able to put it together. So this is a great question, and I think we'll ask our friends from Hamilton County and the TID to answer this for us, and that is, when will the Oasis line actually be started, and how much will it cost? Ted, you want me to ask that again? When? That's all right. When will the Oasis line be started, and how much will it cost?
Well, that's a good question. We're working on that. Part 2 and the Part 2 of HDR solar. We do have some initial numbers. The studies are ongoing. Our consultant is just about ready to start the Part 2 work in what we call the Tier 2 PEIS. And we will have numbers when that work is totally complete. And I think we're not too far off. I think we're talking less than we should have it in the immediate future, probably within less than a year. And so we're waiting for those numbers to come forward. Okay. One of the problems we have, let me explain this too on the Oasis line. We need to also know the Oasis line is will be developed in phases. Probably we'll see connectivity from the Central Business District out to Fairfax. And then eventually it will go out, eventually it may go on shared alignment, possibly with roadway improvements out to Milford, or even out to even out to the Eastgate area. So it is an ongoing effort, and our consultants are working, and we should have numbers very shortly, numbers that we could give you.
Thank you. Actually, if Commissioner Portune is in the back of the room, if Bob, if you want to give him the microphone, I think this is a great question for him. There was a reduction in the state of Ohio funds from somewhere around $40 million to $7 million for public transportation in the last decade. What would this region look like with more state cooperation?
Well, first of all, it's a question I'd answer in two ways. Number one is, I had to go to the front of the room rather than answering it from back here. So let's do this, Mary. I'm going to come up here by you.
Great, wonderful.
All right? Let's do that. And as I'm doing that, let me also supplement Engineer Hubbard's answer on the Oasis line. Just a tad, in that there are, from an engineering standpoint, thank you. From an engineering standpoint on the Oasis line, we actually resolved in our Transportation Improvement District to, if funding was available, to introduce service on the Oasis line by the All-Star Game 2015. And that was not just a date that was pulled out of the air or a date that was simply wishful thinking. It was actually a date that was achievable at the time that we resolved to do that, so long as funding was available based upon the work that needed to be done and the timetables that work was under. The funding is not available, though, and therein lies one of the key impediments to introducing service the manner in which we'd like to on the Oasis line. There is an awful lot of work that's being done. Next week, we are convening a workshop on station area planning. It's going to be a very detailed design workshop with local elected officials, with professional planners, with other involved stakeholders with respect to the number of stations, location, and what the stations should look like on the Oasis line, DMU service, passenger rail service component of the Eastern Corridor. Engineer Hubbard is further correct in that it looks like we're going to be introducing this in segments, the first being from downtown to Fairfax. And because the different segments of the Eastern Corridor can be brought forward each on their own merit. They're not all necessarily joined at the hip, so to speak. So we're working to advance the Oasis line as quickly as we can. Capital cost for that leg, we did have a financing session with ODOT, and ODOT was willing to discuss making a state infrastructure bank loan available for the capital cost of the introduction of that service. You have to have a revenue source to pay it back, but the costs that were being viewed at that time, capital cost of the rail itself, the improvements to the existing rail, and the like, were between $52 to $68 million. Total cost, including the purchase of the cars and station development in that initial segment, was pegged at $98 million. So in answer to the question with respect to that initial introduction of service on the Eastern Corridor, just wanted to add that additional information. Now, the question about cooperation by the state with us and the reductions in funding that have occurred, I would answer it in two respects. The first is that we have a very, very good working relationship with the Ohio Department of Transportation, and especially with District 8 out of Lebanon. Steve Mary, who is the deputy director, and his team are always there at a moment's notice whenever we ask them. They're very helpful. They're very willing to be a part of fashioning solutions to any issue that we face. And I don't mean to suggest that central office in Columbus is not a helpful or a cooperative partner either, to the extent that we're able to connect on issues that we agree on in terms of introductions of service. I think the key distinction between current administration in Columbus and policy that's being meted out through the Ohio Department of Transportation and past is the approach toward passenger rail. The Eastern Corridor Oasis Line does seem to be the one rail project in the state that the State Department of Transportation does favor and is working very collaboratively and in a helpful way to help make happen. In a broad sense, in terms of other rail projects, there is a difference in policy between the current administration and last. I don't think that's any secret, and I don't think I'm speaking out of turn in acknowledging that particular point. And so to the extent that we are looking at developing, implementing a broader regional rail system, passenger rail system in the greater Cincinnati region, we're going to have to build on the positive relationship we have with respect to the Oasis Line Eastern Corridor and extend that out to a broader regional system. No one has said no to that kind of a conversation. And based on the good working relationship we have, we're very hopeful that we'll continue in a positive way. The larger sense, whether it's Columbus or Washington, the big issue is that there are policy differences between funding available for roads and funding available for transit. Transit is the only area where you are required to come up with a local match. Transit is the one area where people are always looking to make sure that there is an actual measurable, quantifiable return on investment to cover the cost of the investment. We don't seem to have that same conversation with respect to investments in roads. And that's a big policy difference between the approach to investments in transportation infrastructure that I would submit we as a group, and of course as we wrap things up, we're going to talk about what's next. It's those kinds of policy differences that I believe as a region we need to highlight and put on our action list when we go to Washington, when we go to Columbus, to try to get action on so that you do not have those differences in approach. Because so long as those differences exist, introducing transit, meaning passenger rail or even bus rapid transit, mass public transit, is always going to be at a disadvantage when you're talking about funding.
Thank you, Commissioner Portune. I might add, I think it's appropriate to your comments that the Ohio Department of Transportation is currently undertaking a transit needs study that is statewide, and there are a number of people in the room who have been consulted as that study goes forward. Some of you may know Tim Reynolds from Parsons Brinkerhoff, who's in the back of the room, who is on the consulting team for that study, and I'm sitting at the table to represent both the chamber and all of our 4,000 plus business members. So there is still a little window of time to influence the outcome of that study. So please, by all means, if you have a passion for this topic and have a word for me or for Tim or for others that are involved, Terry and her staff have all been consulted, we'd be happy to hear that. So I think we've come to the end of our time together for this session on how do we get it all done and how do we pay for it. But let me wrap us up with just a couple of thoughts. Terry certainly brought us back to the topic of collaboration in our community and why it's so important. But at lunchtime, Director Williams talked about opportunity, action, and optimism. And I'd like to flip that for just a second and think about it in a way that I think is important to us as a region. The first is really the theme for today really has been about collaboration And for those of us that have been toiling in the trenches for a long time, and that's probably just about everybody in this room, to achieve change and a stronger economy for the region, I think we could all agree that there has been a great deal more reaching across boundaries in the last couple of years, and a lot more collaboration, at least in some quarters, than we have seen in the past. And today is another good example with the city of Cincinnati and Hamilton County coming together to present such an informative day for you. So for me, at least, the amount of collaboration that we're starting to see across the region is really a reason for optimism. Second, the focus on new and creative approaches to how we get stuff done, to how we fund the kind of needs that we have in our community, particularly for building out our multimodal infrastructure, is really an opportunity. We're at a tipping point in how we get this done. The landscape has changed dramatically over the last few years. We heard a lot of great ideas today about the opportunities that still exist to keep growing as a region and keep making a stronger place for everyone. And then finally, if we think about both of those things, optimism and opportunity, it suggests to me that we can't take our hand off the throttle. It really is time to drive sustained action and change in our community. So from opportunity, action, and optimism, I propose we say optimism, opportunity leads to action. Thank you for your time and attention this afternoon, and I think we're going to transition now to wrap up, but let me, before we do that, please join me in thanking Terry Garcia Cruz, Ted Hubbard, Rusty Schuermann, Bob Koehler, and Mark Polston, who came all the way from Washington to be with us today.
Mary, thank you very much. And please, a round of applause for Mary Stagaman also. Did such a great job as moderator.